Hello, welcome to you early birds joining us. We'll be getting underway in just under 5 minutes. So thank you for joining us. Get comfortable. Probably just got enough time to get a cup of tea before we start. We'll be starting at 10:30 on the dot. Thank you. Good morning, everyone. We'll be getting underway shortly. So if you'd like to get comfortable, please take the opportunity to check your audio settings, make sure you can hear me and that you're comfortable. Welcome to those. There's a couple of familiar names I recognise in the audience, but also a big welcome to those people who might be attending one of our webinars for the first time. I know this has been a hot topic, and so that we've had a lot of interest from people who are wanting to learn about this topic. So welcome to everyone joining us. We'll be getting underway shortly. Okay. Hi everyone. Welcome to today's webinar, all about reverse charge VAT, which is within the Construction Industry Scheme, or CIS. My name's Nick, and I'm a Marketing and Business Development Officer at Davis Grant. I'll just be moderating today. Please take a second to familiarise yourself with the webinar controls, usually along the bottom of your Zoom window. I'm sure we're all kind of familiar with them over the last year, but just in case. The audio options and controls are there. If you can have any problems hearing me, check the settings there, change your speakers or try those things. And you can also submit questions at any time by pressing that Q&A button. Please use that Q&A button if you have questions, because that is where we will be looking for them. And if there are any questions we can't answer during the session, at the end of the session, we will be able to come back to you. If you leave them in there, we will make sure to follow up. Okay, I'd now like to introduce today's presenter. He is both a fellow of the Institute of Chartered Accountants in England and Wales and the Association of Chartered Certified Accountants. His principle is that focusing on your goals, blended with his foundation of strong accounting and tax expertise, makes the difference between success and failure of your business and your personal ambitions. His approach is holistic, so he really tries to get to know you from the base level up so he can tailor his advice, unlock opportunities, and help you to get where you want to be. His skills, built up over decades in practice, help clients ranging from £100 million turnover groups to small family-run businesses, with his aim to get your numbers working for you. Please let me welcome Neil Driver.
Thank you very much, Nick. Appreciate that. Good morning, everybody. Thank you for joining today's webinar. As Nick said, this is all about the VAT reverse charge, and we'll jump back in. It's quite a technical presentation, so hope you can follow. Be happy to answer the question and answers at the end, as Nick said. So the VAT reverse charge, the domestic reverse charge, has been introduced at the beginning of this month on the 1st of March. And it's really going to fundamentally change the way the construction industry works and records for VAT and reports. So it applies to the supply of construction services on their own, or where a mixture of services and materials are supplied. It doesn't apply to the supply of materials on their own, and the scheme isn't optional. Everybody who's affected by it must use it. The measures being introduced because of a VAT transfer fraud in the construction sector. So a transfer fraud is where you've got, for example, a VAT registered labour supplier. They'll issue a VAT invoice but not pay the VAT over to HMRC. And the VAT registered customer will then reclaim the VAT as normal. HMRC estimate that this is costing the Exchequer around £100 million a year, and they wanted to start this back in 2019, and it was delayed, but even despite COVID, it's now been implemented at the third time. It's likely to affect around 150,000 businesses, and so this domestic reverse charge is for building construction scheme. There's something similar for the EU, which was a reverse charge mechanism to do with trading within Europe, and this is was put in for a similar instance of fraud. So this is kind of following similar steps of that. But this VAT is piggybacking off of the construction industry scheme. So first step is to see if a supplier or you are in the CIS scheme, and then to see if the VAT reverse charge will apply. So we'll just have a little recap on what the CIS scheme is about. So operators, contractors who are required to operate within the scheme already need to make deductions from payments to subcontractors. You get a gross certificate, or there's different levels of deductions depending upon their status. Those get paid across to the revenue and deducted from the net payments, but the subcontractor with the deduction claims it back against their tax. So a similar thing to PAYE. Most people are quite familiar with that within the industry. So what's changing? The changes are that the VAT reverse charge affects contractors and subcontractors who use the CIS scheme and the supply of certain types of construction services in the UK. As I've said, there's no opt-in or opt-out of these. They have to apply. It applies if the supply is made at a standard or reduced rate, if it's between UK VAT registered supplier and a UK VAT registered customer, and both the supplier and customer are registered for CIS. So if the customer intends to make an ongoing supply, that comes into it as well. And the customer and the supplier are not connected, for example, associated groups, or there's some kind of tax connection between both parties. In that case, it wouldn't apply. The new reverse charge doesn't apply when supplies are zero rated or when the customer is based outside the UK. So let's just have a look at what work falls under the CIS regime, because as I said, that's the starting point. So basically, this is a highlighting list of the main elements under CIS. So construction industry, and it's basically elements to do with constructing rather than not constructing. So putting up buildings, altering, repairing, extending, demolishing, anything like that. Installation of items that go inside the property and are part of the building. So lighting, heating, air conditioning, that's all covered, as well as cleaning and decorating elements of the structure. So those would all be covered by CIS. And services which provide an integral part of the preparation or completion of all those services. For example, site clearance, earth moving, site restoration, landscaping, and so on. This is pretty well trodden ground. Work that is not under CIS, there's a list here. So quite abstract, some of them: drilling, manufacturing components for equipment, manufacturing the components that are then installed into a property. The earlier stages are not CIS. Architects, surveyors, landscape consultants, art, seating, blinds and shutters, and anything that is kind of more movable than permanent is not covered under CIS. Security systems and burglar alarms are not included, even though they can be permanent. So that's some distinctions there between what is CIS and what isn't. Then, as I said before, zero-rated work is not included in the scheme. New builds can be a particularly complex area, so you need to consider that separately. I'm not going to be covering that in depth today. But for example, construction of new buildings, qualifying new buildings made in the course of constructing that building that are zero rated. For example, the normal development of a residential property is zero rated. So within that, there's complications. You wouldn't necessarily zero rate work on a wine cellar or a swimming pool, but even though that work would be standard rated, you still wouldn't apply the reverse charge to that because it's part of the normal development. Snagging items are still zero rating. So zero rating isn't straightforward, and of course seek advice if you're not sure. Who is affected by it? We'll go into a bit more detail in that. So subcontractors and contractors are affected. Those that provide a service under any goods for VAT registered contractor who is CIS registered and no longer need to account for the VAT in the way that it was done before. What happens under the reverse charge is that instead of the subcontractor applying the VAT, it's the contractor who will account for the VAT as an input tax, as if they'd made the supply to themselves. So it's missing out the subcontractor within the VAT element. Who counts as a subcontractor or contractor? So if you pay subcontractors that work within the scheme, you need to register. And there's also, if your business doesn't do construction work, but you spend an average of more than £1 million a year on construction in any 3-year period, then you still need to register as well. And you register as a subcontractor if you do construction work for a contractor. And you have to register as both if you fall under both categories. So a lot of landlords and property developers and tenants are exempt from this, but it's always worth checking rather than face a problem with the revenue. So I'll go into an example of how the reverse charge works. So John is a roofer who's VAT registered, and he supplies materials and roof to a new office building for a contractor who we call Rob, who's also VAT registered. And then he, in turn, supplies construction services to the developer, who's also VAT registered, and the developer is working for the end user. Now, the end user is important, and we'll come through to that later on. But this is, so we've got a classic example of a subcontractor, contractor, and then the end user. So let's say that John supplies to Bob are all standard rated. And how would that work under the current system? So currently, John, under the old VAT system, would invoice contractor Rob for £120,000. So that's £100,000 for his materials and labour and everything, and £20,000 VAT on top. That was the old system. So under the new system, the CIS reverse charge works that John invoices just £100,000. His invoice states that the CIS reverse charge applies, and he's also got to state that the applicable rate of VAT is 20%. Then the contractor Bob pays John his £100,000. He then includes that within his wider invoice and accounts for output and input VAT, and within that process includes the £20,000 on the supply of John's services. So this is how that VAT flips from the subcontractor to the contractor. John, the main subcontractor, doesn't account for any VAT in his accounting system, and he's only concerned with the £100,000 that he receives. So as a result of that, as a result of the reverse charge process, John charges and receives £20,000 less than under the old system because he's not charging VAT, but of course he doesn't have to account for that to HMRC. Now, the contractor, John, how does he account for his VAT? So when he's paid, he includes the value of the sale in box 6 of his return, but he doesn't add VAT to box 1, which relates to the sales, because he doesn't receive any output VAT on that. So the charge may well impact John's cash flow, because under the old rules, if the contractor Bob was a prompt payer, he could get £20,000 in VAT within his system, within his cash flow, to pay suppliers and work that until he pays the VAT over to HMRC. that extra cash flow from the VAT isn't going to come in to the subcontractor anymore. So that cash flow advantage that Bob had, the contractor Bob, he's got the cash flow advantage, however, because he doesn't have to pay John the VAT out. And at the end of the VAT, there's no VAT to reclaim. And as he's accounting for VAT under the reverse charge, the £20,000 that he would have paid to John contras within the VAT return, and he's exactly the same as he was. So you can see the way that as it flows down the line, the cash flow advantage is with John, the main contractor, because he hasn't got to pay out VAT before he receives it back. And the flip side is that John, the subcontractor, isn't going to receive it in before he pays it across. So Bob, as the contractor, Bob is supplying CIS services. He's got to consider the reverse charge on what he does, as he's in the middle of this example, and whether his client, the developer, is involved in the onward supply of CIS services further down the line. So in this case, it might be difficult to work that out, as the developer is working on behalf of the end user, who is an investor, and the reverse charge doesn't apply. So in this example, it's the developer's responsibility to say that they are the end user, and then that flows back up the chain to determine who needs to use the reverse charge or not. There is an exemption to this, which is to do with staffing agencies and agency supplied workers. If you are such a business, then that is not subject to the reverse charge. There's a specific exemption for agency suppliers and staffing suppliers. So just want to talk a bit more about end users and why it's important to determine who the end user in the chain is. And this is because the reverse charge doesn't apply to the suppliers made to following people. So the reverse charge doesn't apply if you are making a supply to a non-VAT registered customer, if you're making it to a non-business customer, or if the end user is a CIS registered person at the end of the chain who doesn't make an onward supply of the building and construction services. So that end user stops the reverse charge happening, and the person, the contractor that's making a supply to the end user, charges VAT as normal. And it also doesn't apply to any kind of intermediary suppliers who are connected to the person raising the invoice. So an intermediary supplier are end users or intermediaries connected with an end user, for example, the landlord or a tenant. So to be connected or linked to an end user, an intermediary supplier must be either share kind of an interest in the same land where the construction works are taking place, so you're doing some kind of joint development, or be part of the same group or undertaking under a certain specification or definition of the Companies Act. So that's one definition of connected. And more people that are connected are people that have got a relevant interest in the land, who are landlords, lessors, licensors, tenants, or lessees or licensees. So those people are deemed to be connected. A relevant interest in land doesn't include a temporary right to occupy it to carry out the construction services. So that doesn't come into it. You're just looking at the pure person defined, as we've just spoken about. So a property owning group might buy construction services through a member of the group and recharge those services either to group companies or their tenants or both. All the members of that property owning group and their tenants will be end users, and in this case the reverse charge should not apply. How do you get confirmation of end user status? Well, the end user must confirm its status down the line. So that is that it's VAT registered or within CIS, and it's got to put in writing that the supply is not being made to an exempt supply within certain specifications of the VAT Act. There's various wordings that are out there for confirming this. New customers should be asked to provide details of their registration and CIS contractors, or a copy of their CIS verification that you keep in the normal process. So it's recommended that end users sign a statement for each applicable contract. And the wording that we suggested is something like, we're an end user for the purpose of section 55A of the VAT Act, reverse charge for building and construction services. Please issue us with a normal VAT invoice with VAT charged at the appropriate rate. We will not account for the reverse charge. So that's the suggested wording, which is really quite specific. And if you need that, please ask us and we'll send it on. So for businesses that often deal with end users, and this isn't everybody in the chain, because it's only going to be the main contractor or someone that is right towards the end. Practical way of dealing with the question of end user status is for the business to include a statement in their terms and conditions to say that they will assume their customer is an end user unless they say they're not. So that places the responsibility on the customer to respond if it's not the case. But really, one of the issues of this reverse charge in practical terms is this increased level of compliance and an increased need for proper bookkeeping and procedures, and paperwork requirements increase too. So I just want to look at what services would be included within the suppliers of services. And HMRC has defined a list of construction services that are within the new reverse charge regime. And those are that we covered earlier to do with CIS. But to make things more complicated, certain excluded services can become included. For example, if there's already been a reverse charge service between two parties on a construction site, and if both parties agree, any subsequent supplies on that site between them can be treated as a reverse charge, even if they wouldn't normally, if they're outside of a construction, a CIS definition of what would be caught. If there's any doubt whether a type of work falls within the definition of a specified service, as long as the recipient is VAT registered and the payments are subject to CIS, then the reverse charge should apply. So that really gets away any issues with trying to define whether it should be or shouldn't be. When the contractor is asked to consider all the contracts within a subcontractor, they can use, if they can see that the reverse charge applies to more than 5% of the contract by volume or value with that subcontractor, then you can apply the reverse charge to all the contracts. So this 5% rule is in place to kind of allow for a small element of services that aren't caught, but it also can then catch that 5% if you look at it as being a very small proportion of the whole. So you don't have to split them out. For example, the revenue set out an example of a joiner constructing a staircase off-site, and then installing it on site. And you can make a reverse charge service due to the installation element of the supply, and you wouldn't necessarily have the construction wouldn't have been previously caught. But now, because the installation is being caught by the supply, you can do the reverse charge on the whole thing, which actually I think makes things easier, just applying it to the whole invoice rather than splitting it up. That's just a number, it's just one of a number of scenarios which highlights the importance of working this through and taking advice if you need it. So points to consider now. You have to make changes to your invoicing and accounting procedures to take the reverse charge into account. And that might differ depending on whether you're a contractor or a subcontractor. You've got to think through these cash flow implications. You might be feeling them already, and the impact of moving to the new regime. And there might be ways to mitigate that. There's this trigger point around the 1st of March. So the reverse charge will apply to all jobs completed on or after 1st of March, but it can also apply to work that was started before it but completed afterwards. So, you know, there is some instances where there's a bit of a complication in that straddling period. When you switch between the two, is going to determine the tax point on the invoice is going to have an effect on that. So when the tax point is on or after the 1st of March, then the reverse charge will be applied, even if the work was started before. Otherwise, the existing VAT rules apply. So those are some things to think through on invoicing. Some other little points that businesses may face on this. So ordinarily, the tax point is the earliest of the payment and completion of service, the earliest of those two, and that's the VAT point which it must be accounted for. If a VAT invoice is issued within 15 days of the ordinary tax point, then the invoice date becomes the new tax point. So on completion of the service, when you've got a single payment contract, completion of the service is when the contract is finished. And for a stage payment, completion of the service is on the completion of each stage. So it's a bit confusing how it might apply. For retentions, on a single payment contract, the tax point of the retention is the earliest of the payment date or the date of the invoice raised for the retention. And for a stage payment contract, the tax point for a retention is the completion of the final stage of the contract. So this means that if a job is paid for in 2 or more installments, the VAT on the retention is due when the job is completed, even if the retention isn't paid until months or years later. So the VAT treatment of a particular invoice or payment is determined by the tax point and whether that occurs on or after the 1st of March. So for contracts starting after March, you should decide whether the reverse charge applies from the start of the contract or not. So there can be some complications there to work through. On VAT schemes, cash accounting can't be used within the CIS reverse charge invoices. So if you're doing that, there's a big consideration to think through there. If you're on a flat rate scheme, then you've got to review that use, because the flat rate scheme doesn't apply to services made under the reverse charge scheme. With VAT registration as a whole, it might be beneficial for some businesses to register the VAT to make applying the rules easier. This is because where services are caught by the new rules, the recipient business is treated as making a supply to itself of the services received for VAT registration purposes. So this is regardless of whether the supplier is VAT registered or not. The supplier is still treated as making a taxable supply for VAT registration purposes too. So these rules could result in a non-VAT registered business having a far lower effective VAT registration threshold, because you're counting in the supply from the subcontractor as well. So that's where you can kind of double count some of the services towards the VAT registration amount. For VAT payments, when both the supplier and the recipient are VAT registered or should be VAT registered, the recipient has to account for and pay the VAT on behalf of the supplier. So the supplier will not make a VAT payment for those suppliers that we're talking about. But the first £1,000 per supplier per month, which is called by some other rules, isn't ignored here. On invoices, when supplying a service subject to the CIS reverse charge, suppliers must show all the information that is normally required on that invoice as well. So you've got to put a note on the invoice, must make it clear that the CIS reverse charge applies and that the customer is required to account for the VAT. No VAT is charged on that invoice, and it should state how much VAT is due under the reverse charge or the rate of VAT if the VAT amount can't be shown. But the VAT shouldn't be included in the amount charged. So that's, you can show the amount that would be due, but you've definitely got to show the VAT rate. If you use software to produce invoices and your system can't show the amount of VAT to be accounted for under the reverse charge, then the wording should state that VAT is to be accounted for by the customer at the standard or reduced rate of VAT, based on the VAT exclusive selling price for the reverse charge of goods and services. If the invoice is for multiple services, then the customer must be able to identify the reverse charge goods and services part of that multiple invoice. It's got to be very, very clear. Under the VAT regulations, the invoices for services subject to the reverse charge, where the customer is liable for the VAT, must include a reference to the reverse charge. So you've got to keep that on. So some examples of the wording that would go on would be reverse charge, VAT Act 1994, Section 55A applies, or reverse charge, Section 55 VAT A 94 applies, or you could put reverse charge, customer to pay VAT to HMRC. So there's some options in there for you. Again, if you want that wording, please let us know. Where you can also have a situation where customers issue authenticated tax receipts or self-billing invoices. That's quite prevalent within the construction industry. And in that case, there's a separate wording, which is flipping it on its head. And it says reverse charge, we will account for and pay the output VAT due to HMRC, or reverse charge, as the UK customer, we will pay VAT due to HMRC. Now, VAT penalties. Some businesses are going to clearly have and are having some teething problems in getting to grips with this mechanism. With all changes recently, HMRC have said they understand that implementing it can cause difficulties. And they're going to apply what they're calling a light touch to dealing with any errors made in the first 6 months of the new legislation. And that, if you had an inspection and it was found out, or some other way came to light, as long as you can be seen to be trying to comply with the new legislation and you've acted in good faith and you're correcting it, then they're going to take what they call a light touch. And this has been the way with similar things that have come in to do with making tax digital and VAT returns in general, and applying penalties and fines for getting things wrong. So any errors have got to be corrected as soon as possible. As the longer you've got it underdeclared or overcharged, then the more difficult it's going to be to correct or recover them, because you've got other people in the chain to perhaps consider. So HMRC might assess errors during the light touch period, but penalties will only be considered if they consider you're deliberately taking advantage of the measure by not accounting for it correctly. And I have found in practical terms that does come through with this light touch. It's not a reason not to get it right, but it is a little bit of comfort that they're not being so hard on things. So some typical errors of VAT errors of getting it wrong, just basically poor systems, poor record keeping, and poor software, and not enough training. Just not taking enough training and advice on it, or various tax data and things are out of date, and there's not understanding how it properly works and interacts with other taxes. But you can, because of the interaction with this VAT and CIS, there's a link now between making CIS errors and making errors on your VAT return. And so some typical errors on CIS are then going to have a knock-on effect, and you're going to have a double problem because it's then going to affect VAT. So typical errors on CIS are just basically failing to failing to understand that a certain contract is within it, or incorrectly excluding activities from CIS that should be in. Some subcontractors overstate material elements or include the cost of their own plant or scaffolding as a deduction. VAT registered subcontractors include VAT as part of the cost, or just failure to apply CIS to certain recharges within an organization. Those are typical things that have gone wrong with CIS, to really focus on again to get right because of the VAT. VAT errors are flowing through from making tax digital. Some software can cause problems in just the way that it's dealing or not accurately reporting, setting up incorrect codes in software, and within construction you've got different amounts to consider and get right. Or software can sometimes flag it up that the wrong amount of VAT is used and it's not doing that, or you're not reconciling VAT turnover on your returns to VAT turnover when you do your accounts to make sure that all the turnover has been properly accounted for. Some other VAT adjustments would relate to bad debt relief, credit notes, and some other capital goods schemes adjustments and so on. The way that you would notify a VAT error, if you did pick one up, just to remind you, is that you only need to separately notify a VAT error if it's more than £10,000. There are certain parameters on percentages as well, but that's really the key item. To help cope with these changes, most businesses are now using various software, Xero, Sage, QuickBooks, and there's ways to adjust the software to make sure that it copes. So you can, for example, in Xero, go into the accounting menu, and then there's a place that says advanced and tax rates, and there's a specific button, a blue button, to apply the domestic reverse charge. Tick that. QuickBooks were a bit further behind. It wasn't editable until the beginning this month. It should now be updated, and you can find it in the tax rates tab under taxes and follow the instructions there to apply the domestic reverse charge. On Sage, you need to set up codes T21 for a standard rated reverse charge and T26 for reduced rate. But you've got to be on version 26 or later with Sage, so make sure that you're up to date. Cash flow and free agent, I'm not quite sure what's happening on those yet. But using your software will help eliminate many of these issues and get it right. There's also packages for CIS, which can help in Xero. It's £5 a month, and you can run the verifications from in there. On Sage Desktop, £10 a month, again, verify from in there. And QuickBooks Free Agent Cash Flow Sage Online, that's included in the Essentials and Standard packages, but there's no online verification. An important point to note is that the invoice templates in software will only be updated for the CIS reverse charge if you're using their standard templates. If you've adjusted them and you're using your own template, then you must make sure that you update that with the wordings and the necessary items that we've been talking about earlier. You've got to update that yourself. So what should you do? You've got to really think through how you're going to be affected and make sure that you understand how these new rules apply. There's some examples here of things that you need to think about. You really got to take time to go over that and consider things so you can get things right. We're always happy to discuss with clients and potential clients how we can help. So if you want to talk that through with us afterwards, please do be in touch. I wanted to just, before we go on to Q&A and various other bits and pieces, just go through some of the effects of these new regulations. We've spoken about cash flow. So the contractors' cash flow will improve, the subcontractors will worsen. So, you know, if subcontractors need funding, I'll just point out that there's still government funding under bounce back loans and CBILS until the end of this month. You've got to get your applications in quickly if you want to take advantage of that year free capital repayment and interest. You've got just a few days to do that. You can think about moving to monthly VAT returns if you're likely to be now, instead of paying VAT, getting a refund of VAT, because if your turnover is now all going to be under the reverse charge and you're reclaiming VAT on your costs only, then you might want to think about registering for monthly VAT returns in order to increase your cash flow. And if you should be on a flat rate scheme, may well be time to come off of that. So think about that. The record keeping, as I said, is going to be more complex than before. You need to have systems in place to distinguish between VATable and domestic reverse charge supplies, so you can identify what to do with that. And your VAT returns are going to look different here because the contractors have got to put the purchases in box 7, which is the total purchases, and the input VAT in box 4, and you've also got to include the VAT in as part of your output VAT in box 1. So that's the total VAT on sales, but no corresponding amount goes into box 6, which relates to the sales that you make. So you're accounting for the VAT on this reverse charge, and you're including it as your purchases, but you're not including it in your sales. So that's going to result in some of the output VAT being more than 20% of your total sales. And that's going to look rather odd. And beforehand, that would have looked like there's a mistake on the VAT return, but now it's going to be something to be expected. I just hope the revenue systems can hope and it doesn't throw up a whole load of unnecessary inquiries, but time will tell. So for subcontractors, you're not charging VAT on the sales, and so no output goes into your box 1 for the VAT you've got to pay back over, but you've still got to include the sale in box 6. So that's similar to the way that you would have treated a zero-rated supply, and shouldn't really cause too many problems if you're familiar with that. To do with CIS, just to recap, so from supplier point of view, you've still got to continue to validate contractors for CIS purposes as usual, and you've got to check and validate their VAT status. You need to check and confirm if your customer is the end user, and if they are, you've got to keep a record of it. And if the customer is not VAT registered, then there's no change. You still charge VAT as you would have done normal. If the customer's a VAT registered person but an end user, then there's no change and you still charge VAT. From the customer's point of view, you've got to make sure that you inform your supplier whether or not you're the end user. If you are the end user, then you're going to be charged 20% VAT as before. And if you're not the end user and the invoice is subject to CIS, then the supplier's invoice could be subject to the reverse charge, and then you've got to deal with that, as we've been talking about. So there we are. We're here to help, as I said before, and as Nick said, we've got a lot of experience in the construction industry across all parts of it, CIS, capital allowances, the VAT work and advice. Research and development is quite a big area now in construction. We're pretty expert at that, as well as SDLT advice and generally sound and good tax efficient property ownership planning. So I'm now going to go on to the question and answers. I think we've had a couple coming through. Let's see if I can move this slide along. There we go.
I just wanted to say thanks for all that detail, Neil. That was really, really good and really comprehensive. And we have got a specific question in, but I thought before we would perhaps look at that, it might be interesting to discuss how we had beyond the technical detail, like how can Davis Grant help people with this stuff, or how does it fit into kind of our usual way of helping people and services with their VAT returns and stuff like that?
Well, it's just an extension of what we do. It's another technical, complex area that we will and are advising on as we go along. We can help clients and businesses at any level that they like. We can tailor what we do to help them. We can get involved at a very granular level, talking about individual contracts and helping them work out what to go on invoices and work out, almost day to day what they need to do. Or we can come in at a review stage if they're doing their own bookkeeping and working out their own VAT. We can do a review to make sure that things are correctly accounted for as we swept up for a VAT return. But really our key trait is to have a great relationship with the business and the business owners and advise them as they're going along on day-to-day matters. So we've got a great experienced team here. We're pretty experienced in the property sector all round, and so it's just an extension of those relationships and our technical help as we go through. Okay,
so we can help just with that general advice, or we can be there on a day-to-day and also to help with kind of bookkeeping and VAT returns, actually performing those tasks. So it's really scalable depending on the requirements, I guess.
And also help set up the software properly, make sure that that's working. That's quite key. Help with the disclosures on the invoices and so on.
And there's, I know there's a specific question from Sarah, which we'll try and get to, but before we do, I just thought it might be good to address in general. It seemed to me that there was some clear questions from the presentation, which were, firstly, you know, do the services that I supply fall under the scheme? Are they construction services or not? In which case they wouldn't. But then also whether I have to be registered under the construction industry scheme, which I guess are the same thing really. But how would you advise people to kind of find guidance on really shoring up if they're uncertain about whether they, you know, whether they need to be registered and whether they need to be accounting for VAT in this way?
Well, ask us really.
Yeah. Get some advice.
First point of call. But there is a lot of information out there on what does count and what doesn't count for CIS. It's quite a well-trodden path. It's been around for a long time, and so, you know, just a general internet search, you can find an awful lot out about what's around there. HMRC's website is very good. There probably is some areas within our website and our help that have got things on CIS, but really it's understanding the broad principles, and they're, you know, construction or not construction, finishing and so on, are quite obvious in one way. It's things that can be a bit blurry. You do have to be careful. You do have to be careful with this.
I suppose there's a security to someone if they're in, you know, they seek expert advice from us as business and tax advisors and as, you know, accountants, that then there's a security to knowing that and kind of responsibility there.
Yeah,
you can kind of down the line you can point and say, well, they told me it was you know, I had to do it that way or something like that.
I think also within this that with the new reverse charge, the provision that if both are within the CIS scheme, and there has been items that the reverse charge would relate to in the past, then you can both agree that the reverse charge will apply to everything.
Mm-hmm.
So I think that takes some of those difficulties away. But you still have to know if you're in it or out of it.
Understood. Right, we're over time already, but we should probably have a quick look at Sarah's question. So she says that subcontractor 1 is VAT registered and supplying services on behalf of subcontractor 2, who is also VAT and CIS registered, to a contractor, but not the end user, but is CIS and VAT registered. So there's 3 levels, I guess. There's subcontractor 1, subcontractor 2, and then subcontractor 3 as well before it gets to the end user.
Yeah.
Does that mean that the subcontractor's invoice is domestic reverse chargeable, and to the contractor to the end user, normal VAT applies?
Yes, that's right. Provide those higher up the chain. It doesn't really matter how long the chain is.
Yeah.
You know, you can have half a dozen subcontractors, as long as they all comply with the rules, that they're all CIS registered and they're VAT registered, all the way down the chain, the reverse charge will apply. It's just right. It's just the very last one in that chain that is supplying to the end user. You apply VAT as normal.
Okay. Gotcha. So I hope that answers your question, Sarah. I know we emailed it, but the general idea is if you really need clarity on things, please do reach out to us to get that advice. And if you need support with this or any of the other items that Neil mentioned to do with how we can help people in the construction and property sector, we have a lot of clients and a lot of expertise in this area. Unless there are any other questions, which I think there aren't, and we are over time. Thank you very much, Neil, for your time on behalf of all the attendees.
Okay, thank you all very much for joining. Hope to see you again soon.
Thank you. Bye-bye.